to another episode of the ITEL Insights podcast. I'm your podcast host, Andy Park. Great to see everyone here again. We took a couple weeks off, but we're right back into the swing of things. And Dane, how was your week this week?
It's been a fantastic week. A lot of business going on. The markets are continually going our way, so it's an exciting time, and a lot of people are preparing here for 2020, and justifiably so. We got some interesting things coming on next year, leading toward probably market bottoms closer to 2021. So yeah, very exciting time to be talking detached market here.
Yep, perfect. So just a quick little shameless plug before we get started. We've naturally had a pretty large uptick in people wanting our reports, and the report sales are coming in. There's a lot of consulting activity that's been happening at ITEL Insights. Dan, as I understand, you've added a new wrinkle to your product offerings, and now you're giving presentations for larger groups, for consulting groups, as well as developer groups. Is that correct?
That's absolutely correct. Yeah. So, with as time continues to kind of go on, our analytics and forecasts continue to prove themselves up. We're getting asked by more and more groups, investment mentalities, financial mentalities, and just asking us, myself more specifically, to come out and do a presentation. And of course, we're always grateful for the requests, and as long as time allows, then we definitely schedule them.
Right. So if you're an investment group, if you're investment customers, or even your realtors, if you're a consulting or if you're a developer, it's a natural fit for ITEL Insights presentations. If you're interested, give us a shout, dane@itelinsights.com.
Correct.
So let's jump right into the October data. So this is kind of the do or die moment for the market, at least as far as this year goes. There's one quarter left. We want to see how these markets end up. And as you mentioned too, as you alluded to before, it seems like the end of year predictions for ITEL Insights have been holding up nicely. So what happened in October as far as the average sales prices go?
Yeah, so the average sale price actually came in at $1,533,000. So that's kind of it's right below the 10-year mark again. So we're basically kind of flirting with disaster. And as we alluded to basically the whole year, first quarter of 2020, we're going to see a significant move more than likely. And we're still holding very much pat to that. What we're really noticing going on with the buying that's going on is the stress test mitigated folks, right? And that's what we think a lot of economists or optimists are kind of missing out on here, because we are seeing some sales, but we're also seeing inventory kind of fall off from our lofty levels that we were at earlier in the year. Rest assuredly, in our forecast, they'll come back next year. The inventory levels will be higher than ever, and the sales can still stay somewhat off the mat. I mean, we don't want 300 sales in a given month for the detached market. Last month was 950, right? But what you're seeing is kind of need-based buying going on right now. They've been affected by the stress test, and they're in that market. So, we got the chart up here on your screen. And it shows, again, there's no more new momentum into prices going higher. We're basically hanging on for dear life right at that 10-year uptrend and above the kind of 1.48 to 1.50 mark. And that's not a recipe for optimism in our minds. It's you're going to see a lower level come into 2020, and probably in 2021 is when we actually break out of these downtrends, right? So even though we're going to be testing the bottom likely, or one of the possible bottoms in 2020 at the 1.4 mark, as we indicated earlier, if that price doesn't hold, the next psychological level is 1.225, right? So currently market's down 17%. Sorry, I actually misquoted myself. The last sales price here was $1,507,000. So that's actually where we're at here. And that's where we're going to continue to see is lower, longer, testing previously established prices until we break out of these downtrends that have been established.
You mentioned, and you said an interesting phrase here, need-based buying. Can you explain a little bit what that means?
Sure. So basically, it's kind of the purchasers that have been forced out of the market because prices were extremely high in 2016 and 17. And let's say they were missing out on the multiple offers, right? And they just couldn't win the darn bid. Very upset at that point in time, unhappy with the real estate market. Subsequently, we see a stress test, and their purchasing power got sliced. So when the market was even down 10%, and if they wanted to purchase, they almost literally couldn't, because the market hadn't adjusted on its way down. So those guys have a need, those purchasers have a need to get into that market. And that's what we're actually starting to see them be able to come to fruition with prices down 17 to 18%, 16, 18%. they've saved up enough, and there's some markets, as I say, this is a Greater Vancouver average, so some markets are further down, some markets are lagging, right? So on average, they can enter into this market, and those are the need-based buyers. Those need-based buyers aren't really ever going away, right? I've been in the real estate game for over a decade now, and you'll always have 30 to 40% of the market, even in a bad market, still needs to buy and sell, right? So it's the realtor's jobs to go out and find those folks, right? So there is purchasers, but you do have to be very sharp in your list price, because if you list too high, you become a stagnant listing and nobody even wants to look at you. What we're noticing right now is not too much brand new inventory on a month-to-month basis over the last quarter. That's going to change as we go into 2020. I mean, first of all, you have the factors of it's not a good market, and I tried to sell over the last 3 months, and now you're hearing in the media it's an optimistic time. Well, I don't want to sell over Christmas, I'll sell next year. So it's kind of that obvious notion that's going to eventually come to realization. We're saying if you really want to sell and need to sell, you should be selling this quarter, rather than face all the competition you're going to see in spring of next year. Right. And we alluded to this in 2018, and 2019 came to realization. We're pretty confident the same type of deal is going to happen in 2020. Higher levels of inventory, maybe steady buying, but not enough to influx the change between the supply and demand factors. So you're going to see the supply continue to increase, and prices continually decreasing until there's a justification for them to bottom out.
Right. And one thing that's interesting is if you look at the Real Estate Board of Greater Vancouver outlooks, kind of every quarter they say, oh, we're in recovery mode. And, I think we've been kind of harping on them a little bit, and we think that they've been incorrect. But interestingly enough, as they stick to their guns, at some point, the market is going to hit recovery mode.
That's right.
So what are your general thoughts on that? Like, are they just, sticking with one prediction for as long as they need to until they become correct? Do you think it's a conscious decision on their part, or is it just them looking out for their realtors and at some point they're going to be right?
Right. I would probably lead more to your last statement. So, I mean, let's real estate boards, they mean well, but they're not paid by the public, right? They're actually paid by the realtors and the real estate associations. Right. That's why realtors pay their dues and all of this, right? Yeah. So it's kind of the gatekeeper of the real estate industry and the mouthpiece overall. So they would never really want to say it's a horrible market, please don't invest, because that's hurting the person that's feeding you, right? So, but I will say they never once called for a top of the market. We definitely did. We've been proven correct. Each and every year since 2016-17, they've been saying this will be the recovery year, this will be the recovery year, this will be the recovery year. As you correctly state, they will eventually be correct. We just don't think next year will be the time. Likely in 2021 for the detached market is where we see this market actually physically bottoming out and starting to break down trends and move up to previously established prices higher, which is going to be the first time that's basically happened since 2016.
Yeah, for sure. And I just wanted to point out one thing you said before. It's when we kind of state these numbers, we're actually looking at the market on average. So there's going to be some dramatic fluctuations between different regions in Greater Vancouver. So if you're interested in your particular area, or you want to find different areas that might have greater movements than others, then obviously contact us at itelinsights.com, and we have reports for those individual regions. Absolutely.
And just another on Michael Campbell's Money Talks, they just recently did one of our features, our monthly releases, and we don't hide our information, we don't delete our information. Once it's out there, it comes to fruition, really. And in there, it does say that not all markets are created equal. We try to explain that all the time. There are actually some few opportunities almost out there, right, for a personal purchase. Maybe not for an investment sake, but there are markets that are down over 30+% and nearing the range that they would be likely bottoming out. Now, they're not going to be increasing in price over the next year or two, but they are kind of laying dormant, ready to build up in anticipation so that they can run up in values. So, there is some areas that are more investable than they ever have been over the last couple of years. So we don't mean to be negative on Greater Vancouver. It just so happens that Vancouver's in a negative position continually, right? Once it's positive, we can't wait for that day that every market is looking up. There's a few markets that are looking like they're bottoming out, which is a promising feature, leading to a 2021 being pretty much a guaranteed bottom. But there's more ramifications coming up here on the pricing chart that will kind of be even more of a need-based selling. and we can probably get into that in the inventory here as we go. But so right now there's need-based buying going on. This market hasn't really seen need-based selling since a blip of 2008, and before that since the 90s. So this will be kind of wait and see, and once you see, you'll believe exactly what we meant by this in this podcast today.
Right. No, that's a good segue here. So let's actually talk about these sales numbers here. So can you explain why we're not seeing need-based selling and what happened in October as far as sales volumes go?
Sure. So the sales volumes basically kind of kicked back up. And again, it's on your screen right now. The sales volume basically kicked back up to that 950,000 or 950 sales threshold that we mentioned in a couple of podcasts previous. So it seems to be in that range bound. Now, I wouldn't anticipate seeing November really increase on that. October is kind of, like you say, your last bastion of hope for the last quarter there. So, it's remaining inventory that is actually being sold because there's not too much brand new inventory. If there is new listings, and those new listings ultimately are fairly realistic to the market, right? I mean, they know it's not great, and maybe they're forecasting next year. I need to sell next year, so I want to sell now. So they're listing close to what market value truly is, maybe through ITEL Insights or however they're getting information. That's good on them. To be listing at basically sellable prices. Because if you're not, you're just one of the many on the inventory that stays stagnant, right? And so that's what you're seeing. You're seeing the houses that are livable, the ones that are in moving condition, turnkey ready kind of thing, those ones are being sold. Also, you're seeing a lot of higher end homes sell at lower, high end prices, but much lower, right? So a $7 million house selling for 5.2, things of that nature. So there, that realization that there is a new justification in lower prices, and the buyers have a right to be sharpening their pencil over the last year or so. The sellers that are coming on the market today are in lockstep with that. However, our advice, if you're selling, to be selling to these individuals, because again, they're need-based buying. So once they purchase, they're not going to be buying a secondary or third, right? So once this kind of 20% gasp is over, then you're left with a glut of inventory again. What we believe will happen inevitably is, clients that have come off the market, they'll actually come back on the market in 2020 because of this recent perceived uptick in real estate, which I really don't see. I mean, we're $100,000 less than last year, and so where really is the uptick? But I mean, that's everyone's entitled to their own opinion. Fair enough, right? But yeah, the sales will remain basically range bound within that downtrend. So there's houses that are selling in the detached market. We have to be very sharp in your price. And if you're waiting too long, you're just going to be caught up with the influx in inventory.
Everyone else.
Absolutely.
So I guess the recommendation, and you mentioned this at the top of the podcast, is, well, first of all, ITEL Insights will never try to push someone to sell a property or buy a property. That's not the business ITEL Insights is in. But if you're currently equivocating and you're trying to decide whether or not you want to sell, now might be a better time than waiting a quarter when everyone else realizes what the market is and tries to enter it. Right?
Absolutely. And well, I mean, here's the beautiful thing. We had a follower of ours, a serious listener, and I met with him, I believe, a couple of weeks ago. And our analysis for him was honestly just to hold. He was in such a position that he doesn't need to sell. He would have liked to have sold, no question about it. But and the market's not there. But honestly, that market, it's at such a percentage loss. There's really no impetus for him to sell right now if he can avoid it. Maybe rent the property out and look at it again in 3 years, when the market's actually starting to come back up. You'll see more activity. You'll see more of that buying mentality come back. So as we've always said, we offer actionable intelligence. Sometimes the actionable intelligence is to hold. Sometimes it's to sell. And over the past couple of years, that was the actionable intelligence if you had an investment. Sometimes right now, that investment is honestly in a hold position. Like, we're past that selling position. If it was an investment and you're already down 28%, well, maybe you would like to know how much further you got to go. If it's a whole 50%, yeah, maybe we still want to be selling. But if there's only 42 or 41% left to go, well, then you only got 11%. Well, and then it's your modus operandi. What is this? If it's a personal property, I'd say ride it out. If it's an investment, that's up to you. If you want to sell one and buy two later, right? And that's why we do our consulting. And there's so many different variables that get tossed into a personal situation, and that's why we try to focus here on the broader market. But We break down, an independent market, say if it's North Vancouver, we can actually break down Lower Lonsdale, Upper Lonsdale. If it's in North Burnaby, we'll break down the Curtis Sperling area, which is a sub area, and give you the whole psychological values right along the way, right? So, tons of actionable intelligence is what we offer. And so far, it's to the benefit of $360,000 one way or the other, either by selling and taking advantage of it, or maybe by listening and not purchasing at that point in time, right?
For sure.
There is if you're in a need-based buyer, that's a different situation. Investment, we still want to be holding off for a better outlook for sure.
For sure. And I won't give away the specifics just because they come in the reports. But what I thought was really interesting that we were talking about before we started this particular podcast is that there are dramatic differences between different regions in Greater Vancouver. And you were saying that, as a buyer, if you need to buy a house in a specific region, now's actually not a terrible time to buy it, because if you're going to hang on to it for another 10, 15 years,
that's right.
The difference is going to be marginal as far as how much you lose. But there are certain areas, no matter, if I want to buy now or later, you're saying stay away from it with a 12-foot pole, right?
Absolutely. The percentage drops, they're not close to being done. There are other areas where the percentage drops are fairly close to being done. And then for a personal reason, absolutely, you can get our blessing to go ahead and purchase that property. The corner lot with the pool and the yard. And it's the one for sure. For an investment purpose, you don't really care about that so much, right? It's about the investment, the return on the investment, and then we're looking for a more optimal entrance, right? And that's usually with the inventory, which I think is what we're probably getting into next year.
Yep. So let's talk about the inventory. We touched on this a little bit.
Right.
We expect that to kind of grow a little bit in early 2020, but what's happening right now?
Absolutely. So over the last quarter, we've been falling down basically. Here, we'll just put the chart up right now, and we're coming right back down to test basically that uptrend. I wouldn't be horribly surprised if this breaks this kind of gradual growth that this Greater Vancouver inventory has had. Then again, I wouldn't be surprised if it retracts and bounces off it and moves back up here in November, just based on this kind of optimistic inventory or report that the media at large has been exclaiming about. That being said, we're nowhere done in the total inventory growth. As we alluded to here earlier, what you're actually going to be finding coming into 2020 is need-based selling. Now that's because in 2020, when prices revert back down to $1.4 million, that's where they were in 2015. Yeah. Now, 2015, you signed a 5-year mortgage, life was good, and the market went up roughly $400,000 since then. The odds of somebody not pulling out $100,000 and having a good time, a great vacation, a great wedding, a great whatever the case may be, is slim. And now we're back down in value, right? So if you pulled out the full $400 or $1,000 and maybe invested in a condo at the peak of during 2016, we're really in trouble right now, right? So you're actually going to see need-based selling. They need to get out of this property before the bank takes it away from them,
right?
And that's, like I say, a market that Greater Vancouver hasn't seen for quite a while. 2008, 2009, right around my rookie years of real estate, it was prevalent. It was a thing. This upcoming year, 2 years, it's going to be even more prevalent. And those who were invested in the real estate during the 90s, that's what we're going back to, a very kind of chaotic atmosphere. And the irony, though, nobody believed the last few years were chaotic, and no one will really believe it's chaotic till we're at the bottom. Right. And then everyone's going to be saying, oh my gosh, run for the hills, run for the hills. Well, that's not the time to run for the hills. That's the time to come out of the hills and start purchasing in the downtown core again, because prices have bottomed, right? So we really wanted to be running the hills during 2016, 17. That's where you wanted to be selling your properties at maximum dollars and going on a vacation. Now that the market's bottoming, we want to be starting to come back out of those hills in 2020 and 2021. Right. So again, the inventory levels, you're going to see them increase probably past record old highs, right? So we're going to see 9,000 plus inventory. Now it's not going to happen first quarter of January. We're going to see an increase in the inventory, and we're going to see a kind of regeneration of this growth trend. Yeah. But real estate, again, we equivocate it to not being a stock market. You can't halt trading, but you also can't halt trading on the way up, right? So you can't say, hold on, we don't count November and December, and we're just going to continue with spring markets. There are definitely seasonal effects in markets. We see those as maybe a little bit different as the rest of the market. We actually see December being a huge indicator for the upcoming year, and same with February. Very interesting data point. And February, we're still anticipating seeing that market probably test 1.40 first quarter, and I wouldn't be horribly surprised if it's actually in February. Now, that's a fairly precise forecast, but we'll see how everything plays out.
Yeah, sounds good. There you have it. From Dan Itell of ItellInsights.com. Everybody check out the kind of past few podcasts if you have not already. If you enjoyed this podcast, give us a huge thumbs up, smash that subscribe button, and we'll see you on the next one.